Hello friends, welcome to my channel FinTech Logics. So today we will discuss about recurring payment scenarios in a lending life cycle. So we have discussed about the overall framework of payment need and multiple one-time payments. If you have not seen those videos, I'll provide a link here. Please have a look. So coming to today's topic, we would be talking about the recurring payments. So now what are the different use cases for recurring payments? So either it can be your normal installments, or sometimes it can be repeat fees as well, periodic fees. Let's say valuation fees, those are taken, let's say, every 2 to 3 years for a real estate loans and all. So those kind of use cases also come under this recurring payment category. Now, why this is done? The first step is that this is for ease of customer, that customer does not need to remember the due date and make payment or face penalty. So it is definitely for ease of customer. This is also required for credit collection efficiency purpose, that okay, at correct time the payment should be received. And this is also is essential for risk management perspective, that okay, some kind of guarantee is there that customer would make a recurring payment if the mandates are already set. Now, what are the different payment modes through which it can be paid? So either it can be from a payment card, specifically very prevalent in US, where through a debit card also you can set up recurring payments. It can be done through your ACH and your ECS mode of auto debits every month or every quarter. It can be through a direct debit of an account, setting up physical mandates or direct mandates with banks. And it can be also done through recurring wallet debits, right? So these are the different payment modes through which recurring payments can be collected. Now, we have to understand here is that here we do some registration for these recurring payments, and then the rest of the process we don't need to be bothered. It is automatically taken care by system. So as a step number one, we create a payment plan. So normally this is derived from your amortization table. So if you're not sure about the amortization table, we can create a separate video on that. Please let me know in the comment section if you need details on amortization table. So in short, your plan would say that okay, in what frequencies and what amount has to be taken from your borrower in regular intervals. So normally this is not set as the exact amount. So when I move to the step number 2, when I set up a mandate or a fixed arrangement with my bank and the borrower's bank to do this debits on a periodic interval, at that point of time I set up mandates, and these mandates are normally set up with a higher amount than your installment in order to adjust your changes in an installment amount if need be. Normally that scenario does not come, but if it comes also, it can be taken care in case there are multiple dues which are pending. So looking at that condition, normally around 5 to 10 times more than your normal monthly or periodic payment amount is set up as your mandate amount. So in step number 2, a mandate is set up, which is an arrangement between your borrower's bank and lender's bank. Giving consent is the third step, where the borrower agrees by digitally either signing the mandate or through your Aadhaar verification, OTP verification, or through some other mode, how the borrower would confirm that mandate. Once the borrower has given his or her consent, then the collection is authorized by the borrower's bank. Now from step 5, this is a repeat process. So once you have done your step 1 to 4, from step 5, as and when the due date appears, let's say you are collecting a monthly installment, So let's say 30th is your due date. So on 29th this will get processed, that okay, on 30th I have to debit borrower's account and I have to get my money. The lender will present these on a periodic interval. The processing of payment would happen by the borrower's bank in step number 6, and the money would get deposited in the lender's account. So 5, 6 and 7 are the processes which goes on a repetitive basis. Now here, because your payment service provider, if it is involved, they can be also be a part of the entire collection cycle, or this is controlled by the payment ecosystem in detail of setting up the payments and doing this as a seamless process every month till your loan closure. Now there has been a lot of enhancement or advancement due to digitalization in this area, eliminating the complex and tedious process of submitting a physical mandate, signing physically, taking it to the bank and doing the registering. If you forget, it also creates other kinds of issues. So there has been subsequent enhancements which has made because of digitization. We will definitely cover that in our subsequent videos. So I hope you would have liked the overall framework, how this recurring payment setup works in a lending scenario. Thanks a lot for watching my videos, viewers.